And in terms of storeholds of wealth, I'm wondering if you have any particular asset in mind. So, for example, would gold serve that purpose?
Gold as a overlay on a portfolio, on top of a portfolio, works like an insurance policy. Gold is a dead asset. It just sits there. But it's always it's got characteristics that are limited in supply. One of the most important things, it's the third highest reserve currency held by central banks. And in periods of time of war or such periods of time of credibility, it is the medium, like they say, it's the only asset that you could have that's not somebody else's liability. That means you have to be dependent on them giving you them giving you money, or they're giving you something. And it is international. It can be moved, and it's tried and true. So in that regard, but its behavior is very environmentally specific. So as a hedge asset, as an overlay, it's really like a great insurance policy, because when the other assets go down, and so something like that, or the equivalent, plays a role in a portfolio, not as the core asset, but as the effect of diversification of asset. And that's, if you do it as an overlay, it's about 15% of the portfolio, not taking away assets from other parts of the portfolio. So, but I come back to my basics, which is the four quadrants, the timeless and universal. The one thing that you could be sure of is that cash will not be the best asset class. And when you diversify to a portfolio, so you got a well-balanced portfolio of other things, whenever you have that diversified portfolio, it will outperform cash, because it's the nature of the system. People, the central bank puts money on deposit. People with better ideas come along, take elements of risk, and it works. When that diversified portfolio of asset classes doesn't work well, that balance, there are times, it works better than the traditional portfolio in the down moves by a lot. Like when the markets goes down 60% or so, the worst cases are like 20%, maybe a little bit over than that. And it never stays there, because central banks can't let capitalism, which is dependent on those other assets performing a higher return than cash, can't let that continue. So they come in there and they produce money and credit, and it produces the pop. So I think in terms of, like, again, I want to emphasize what I said before, think in terms of storeholds of wealth, how you can move it from country to country where it's acceptable, and that way, and don't view money just through that idea of the fiat currency, because a fiat currency is cash, is short-term cash, and cash is trash.